So I'm going to start out just really simply by having each of our panelists very simply, give us a quick kind of 20-second introduction of who they are and what they do, and we'll dive in from there. So let's start with you.
Cool. Hi, everyone. My name is Wei Sheng. We run a VC fund in Singapore for the last 10 years, investing in AI. Some companies that you may or may not have heard of includes Shopback, Funding Societies, Appier, PatSnap, Syrian, some of which are global unicorns and some of which are local champions.
Hi, everyone. My name is Ray. I'm technology partner at Alpha JWC Ventures. I look after our AI and tech investments. Some of our recent investment is Zhiphu, an LLM, small language model vertical company in Palo Alto. We invested in Cornerstone Robotics as well, based out of Hong Kong, and Harrison AI from Australia recently.
Hello, everyone. My name is Esther. I am a founder and CEO of 3C AGI Partners. So we focus specifically on AI infrastructure. So no application, no LLM, just purely infrastructure. And previous to 3C, I was the founding member of SenseTime. So for those of you who know, SenseTime is one of the largest Chinese AI platform companies.
Hi, my name is Seaman. I run Rakuten Capital. From Rakuten Capital, we do everything from large ticket item investments to M&A. Some of the investments that we've made throughout the 15 years will be companies like Lyft, Careem, AST Mobile, and some other interesting investments and acquisitions like Viki, and so on and so forth. Good to be here.
It's great. So Seaman and Wei Sheng spoke last year with us, so we're delighted to have both of them back. Can everybody hear us okay? I just want to make sure that you're all good. Okay, great. So we had a VC panel on the main stage yesterday, and it had this kind of bleak, doom and gloom-like title about the VC winter. But I know that all of you are, varying degrees, having pretty good success with your funds and investments. And so I thought maybe just a kind of speed round here on your kind of sense of the overall investment outlook. And I know that all of you do things in varying degrees in Southeast Asia, but also beyond the region as well. So any color you could give us on kind of the startup ecosystem and the venture scene in Southeast Asia versus other places where you're investing would be interesting. And maybe let's come back this way. Let's start with Seaman on the end first and work our way back.
Sure. For us, the investing landscape has changed a lot. We had, in many ways, a geographic focus about maybe 5 to 6 years ago. There has been generally a bifurcation of interest and then success of startups. So Southeast Asia has become less of a spotlight. We've become vertical specific for verticals like AI infrastructure. Things like aerospace, renewable energy, and robotics are really interesting. Things like bioinformatics and computational biology are also very interesting. We invest in many ways to see what can be really meaningful to the Rakuten Group and group holding structure for the next 10 to 20 years. And because of that, there are ideas of like, is this synergistic to us? But more importantly, it's really about trying to build the next pillars of an organization that we love and cherish.
So as for me, I came from the industry. So when I joined SenseTime, it was 50 people. When I left, it was 5,000. So during that time, I actually had the fortune of witnessing the growth of AI 1.0. 1.0 is when you know that AI works, but it's not popularized, unlike 2.0, where everybody has a ChatGPT in the phone. So, and throughout that process, I had the privilege of overseeing the building of, at that time, one of Asia's largest data center, still in Lingang, Shanghai. And I actually saw there's so much inefficiency in building data center. And I sensed that there's a crisis in the way that we build AI, the way that we build AI compute need to be completely revamped. That was 4 years ago, and our data center already account for 5% of Shanghai's total power output. That was 5 years ago. So you can imagine at this rate that the world is going, the world will run out of electricity for AI very, very soon. So because of that crisis, my fund specifically focused on how to rethink about building AI in a different way. So these opportunities arise outside of China. We have companies we invested company in the US, in Australia, and we have companies in Singapore. So give you one example. One of the Australian companies that we incubate just produced the world's first neural computer. So we use neural as a CPU engine to power the chips. So in this way, you use a lot less token. So the data center doesn't need to be that power intensive, for instance. We also incubated the world's first space data center, because half the power in data center goes to cooling. And then when you have something in space, cooling is very efficient, and solar energy is free. So that's just some of the examples, but most of these companies are incubated globally.
Wow, so we get not only a perspective of markets out in Southeast Asia, but a glimpse into the space market, which is good. Okay, Ray?
Yeah, I think my take from Indonesia specifically, because this is our home base, even though we invest globally as well, is that I'm more on the optimistic side. And part of it is because of our realization that AI solution that works for Indonesia doesn't need to be following what we've seen in the US. And in fact, it cannot be following what we see in the US for several reasons, right? For example, when we talk about AI, one of the first questions that we ask is the ROI. And when it comes to the ROI, then cost comparison at one point or another will come into the discussion. In Indonesia, the wage level is really, really low, right? There's a minimum wage level, and in fact, there's something called the invisible economy, if you will, where the wage level is even lower. So from the get-go, an AI solution that works for the US wage level is not going to work in Indonesia. Yeah, that's one. Secondly, I think in one of the yesterday's session, we talked about how in Singapore, there's about 3.5 million people in the workforce. Indonesia has 40 times that, right? Close to 150 million people. And quite a number of that are blue-collar workers. We've spoken a lot about white-collar workers. We've discussed endlessly about how they will be replaced potentially, how will we adjust the white-collar work, etc. But then there's this unexplored space in Indonesia about the blue-collar work. And we have unique challenges there as well. For example, if you deal with millions of hectares of palm oil plantation, right? That becomes something that you need to address at scale, logistical challenge, when it comes to distributing the fertilizer, for example. But it doesn't need, my key take from that is that it doesn't need to be 0 or 1. It doesn't need to be humans fully do it, or a humanoid robot will do it perfectly. There's a lot of point along the spectrum in the middle where we can do something in there, right? So for example, if we want to do self-driving, you don't need a full self-driving like Tesla or Waymo. You need something that can drive well enough in 10,000 square kilometer plantation, but maybe you need to come up with a delivery mechanism with wheels that can deal when you get stuck in a big hole in earth or something, right? And the third one, going back to the regulation in Indonesia, we have regulational structure as well. So if you apply AI to financial sector, your AI and your data must live in Indonesia, right? So that is another constraint that I think will drive innovation in different interesting ways, which we can go into deeper later.
Okay, Wei-Chung?
I think your question is around the VC winter, our thoughts around it. The VC winter as it stands, I think it's real, everybody experiences it, and our firm, for one, welcomes it. In fact, we think we are not at the end of it, and we should push even harder on that. Meaning to say that, in our opinion, in the last maybe 3 or 2 to 5 years, there has been a lot of businesses that, if we were to rationalize a little bit, nobody should be investing in. And that businesses today, if you go out to the market, you won't get a single cent of funding. And I think that rationalizing has come in. And it's good for the society, for the economy, for future growth to be built, for the ecosystem as a whole. But then that notion drags down those that should be built. And those companies that should be built suffers as a result as part of collateral damage. So what are the opportunities that we think should be built? There are a few areas. If you think about, today there's a lot of talk about generative AI. I think I saw the talk given by Oliver from OpenAI. It was interesting. In our own perspective, if you can call it a value chain of generative AI, you have the manufacturer part, where you build it, the foundational model part, multimodal, large language models, that's where you stand. Then you have the distribution part, where you take that and then you wrap around. People call it ChatGPT wrappers, right? It's quite a common term these days. And the last part, you build, you utilize it. So this is where people talk about agentic AI. You build entire workflows around it. We think in Southeast Asia, it's hard to compete on the first part because the US and China are way ahead. And in reality, these two will probably bifurcate, and you'll probably have competing large language models, foundational models, and that's how the world is going to shape up, likely. But in the middle, where you distribute it and where you utilize it to build other models on top of it, I think that's where a lot of opportunities lie. The current 3-4 companies that we are looking at right now are all on this opportunity. And it's interesting because some of our fellow investors who may have been, still investing in or have been very big on models that were prevalent 3 to 5 years ago, it's now starting to shift to that as well. So we're seeing a lot of shifts towards, that sort of models.
It's really interesting. Kai-Fu Lee, who we've had speak at several of our events and is the author of this much discussed book, AI Superpowers, launched his own effort in China to create an AI platform, 01. And then when DeepSeek came out, he's pivoted. And he's pivoted in exactly the direction that you are suggesting. If you see his public comments, he's basically saying it's all about middleware. It's all about taking somebody else's platform and going to companies and say there's nothing really to apply this platform to your particular industry and make it work, and that's really where the opportunity is. And I would think that, particularly in Southeast Asia, that must emphatically be the case, where there is so much variation in the languages, in the culture, in the regulations, just even the geographic features of the landscape. But let me ask you about the geographic makeup of your portfolio, because this is a very young fund, right? I mean, how old is it now?
Our fund's 10 years old.
10 years old.
Our third fund.
And now how many companies in the portfolio about?
We have about 30, 32, yeah.
Pretty quick to get up and running like that. And are they all in Southeast Asia, or you've got some outside, or where?
Mostly, well, our take was that there's talents in Southeast Asia, but not enough funding. So there's a big funding gap. 10 years ago, I think there still is now. So primarily Southeast Asia, but building for the world and building for a regional.
And so, within Southeast Asia, there's tremendous diversity, obviously. And do you try to pick companies in particular markets, or are you looking for companies that straddle all the markets and try to be pan-regional companies?
Right. A big part of thanks for asking that question. A big part of our thesis is we believe that companies to exit well. Ultimately, we are capitalists, so we need to exit and we need to, get our money back. And to do that well in Southeast Asia, companies have to at least be regional, if not global.
They do. Okay, interesting.
So most of our companies, they might start from one country in Series A or pre-A, but by the end of it, we have to see the potential for that company to be a regional company. So that's our thesis from day one. I just want to make one point when you talk. I forgot that Kai-Fu was speaking. I should have got my book here to let him sign it. The middleware part. I think I don't think Southeast Asia should not completely focus on the first part, the foundational part, because I think there are still opportunities there. We are still in very early days of certain foundational models. For example, video generation is still quite a young space, right? Yeah, I'm sure all of us have seen what Trump, tweeted, that funny video on Obama, right? The one that was fake.
I don't know whether it encourages me about the prospects for the video market, but
but you can still tell that was fake. We still have a long way to go in certain prospects, right? In certain modes, and I think there is a strong wave, and we were discussing this backstage. There is a strong wave of very strong technical talent coming from China, and they can't, really build those models in China anymore because they are not able to access the best NVIDIA GPUs or Marvell GPUs and things like that, and so they have to go somewhere. So where do they go? Well, Southeast Asia is a natural place. Middle East is another place. But these are opportunities for investors like us to pick on those and build on those talents.
Interesting. So Ray, I want to come to you next. Your focus on Indonesia is fascinating to me, and I think it sort of gets to a fundamental question about both how to invest and how to build a business model in Southeast Asia. So we've heard Wei Xiong say that they're looking for companies that can scale regionally. Several years ago, maybe more than several years ago, I remember I got really obsessed with Grab when it was just getting up and running. And so I wrote this very long profile of Anthony Tan and Grab, and I got about 2 weeks into the reporting, I got lots of great access. Anthony was really great in spending time with me, and I realized that this couldn't be just a story about Grab, because Grab was a Malaysian company that was gravitating to Singapore, which was still a pretty small market, and it was pursuing this pan-region strategy. But just next door, there was this other company, GoTo, which was focusing on what is overwhelmingly Southeast Asia's largest market, 40% of the GDP of the region. And their philosophy was different, which is that just get Indonesia right, and then you can worry about the rest of the market later. But there's enough scale in Indonesia that you start there, and that's the smarter strategy. And this became almost the kind of classic, dilemma for people that were trying to both launch businesses and invest in businesses. Is it better to try to figure out all these different markets all at once, or is that just too confusing and distracting? Is it better to specialize on the big one and then worry about the smaller, harder to scale ones later? And you can go back and Google that article, but I sort of ended up leaning towards it's smarter to start in Indonesia, right? It's easier. You can just build up scale faster. But I was wrong. GoTo now is much the weaker company than Grab, and they have, against my expectations, demonstrated that they're scaling pretty well across all these different markets. So as someone who's based in Indonesia, where do you come down in that sort of fundamental question on, do you start with the big one, or do you try to do everything all at once?
Yeah, I think it's case by case. So what I mean by that is, I think if we talk about Grab or GoTo, we can't exclude the paper that Kevin Alui has published about GoTo, right? And there he specifically addressed this point where going Indonesia first, where what you're selling is the same thing, it's commoditized in a way, and then you kind of bang on people's tendency to have brand loyalty later. That structurally doesn't work so well in Indonesia, right? So if you're moving in a business which is of a similar nature, I think it doesn't work that way. In fact, you probably should start from the developed economies so that you can have, hopefully, you can reach profitability, and then you have the war chest to battle it out in the market like Indonesia. But if you're doing health tech, for example, then where humans are the same, right? And depending on your solution, at a certain level, people will pay for it because health, it's a trade-off for health or money. So I think for the case that we've seen again and again is that it's smart to start from the US first, the biggest health tech market. And then we know that whatever solution you have there will apply to other humans on the planet, so to speak. So yeah, I think there's no single answer to where you start, but on the point that Kevin pointed out to in the paper, right? As in the ability to pay, as in the willingness to pay. Yes, if you're selling something that is a commodity, then what people will do is that they'll open all the apps and then they'll compare the price because it's the same thing. But there's a market in Indonesia where people rent an iPhone for about 50 Singapore dollars per day. So look, that's a lot of money for renting an iPhone, right? So do people want to pay? Yes, but for what? And I think figuring out the for what is a critical thing if you're deciding to start from a market like Indonesia. The other one is skincare. So, people do care about the look and they pay for it. Yeah, but the key is that it cannot be you're selling the same thing, and then you just have different prices, and people will always just pick for the cheapest one. So it's a case by case.
I see. So Seamin, I want to turn to you next, and this is a little bit of a out of left field question, but you work for one of the biggest, most influential Japanese tech platforms. You're based here, but where do you see Japan in all of this? Because in some ways, Japan is almost the equivalent of Indonesia. It's this giant market. You can get lost in it if you try to win Japan first. And you know, the stakes are so high in Japan. Does it make it harder for a big company that's based in Japan to think about, you know, global horizons in terms of its venture investments?
I think the short answer is yes, specifically because any corporation that is conglomerized domestically will have a lot of issues trying to focus outward, right? Whether they want to build a business in the US or build a business in Southeast Asia. I think the best manifestation of that is trying to build an investment firm to be kind of the trailblazers to first put down financial pegs into platforms to see actually what works and what doesn't. That's kind of been the mien and reason for being for Rakuten Capital. And generally, we get a lot of great feedback from the investments that we've made. You know, like we invested in a company called AST Mobile, which was a large satellite company that went public recently. It's really funny. They have a larger market cap than us now, which again goes back to.
Really? Is that right?
Yeah. I mean, well, actually, just tangentially, one of the issues behind Goto, which I was an early investor on, and this is contingent for all the Southeast Asian countries, is that in many ways their biggest mistake was going public in Southeast Asia, in Indonesia. The biggest issue was because of that, they had the lack of capital flows, they had the lack of stability. The IDX at that point was very, very volatile in terms of how they were issuing policies around short selling and so on and so forth. So if a company is of size and is of scale, their modus operandi should be to go public in markets like the US, in markets like Hong Kong, and so on and so forth. That would be the better signet in terms of defining the success financially of the company. Now, going back to what we did, we looked at this company like AST Mobile. We liked it because it was aerospace and it was actually looking at a novel approach to broadband satellite communication that quasi-competed with Starlink. And thankfully, that kind of actually worked out very well when the company went public. Now the next step is now we're working with them hand in hand to build out meaningful partnerships that potentially gets them distribution into Japan and so on and so forth. So an investment led to the company financially succeeding, and now we can work with them commercially in a meaningful way. I think that's the ideal path.
So this connects to a point that has long fascinated me, and it's relevant to your comment about, you know, investing with exits in mind, right? So I'm sitting in Hong Kong, and we've been making fun of the Hong Kong market for essentially being dormant and dead for low 2 or 3 years. Then all of a sudden this year, the Hong Kong market has just explosively come back to life. More than 40 IPOs, amazing. Something like $16 billion in market cap that's been raised. That market is on fire. It is actually ahead, I think, of the New York markets, and it's definitely way ahead of London. And it's just, you know, streets ahead of poor Singapore. So Singapore has had 2 IPOs this year. One of them was about 770 million, but nothing, you know, the other one was like 100 million or something like that. And last year, unless I'm mistaken, it had 1, and in 2023 it had 0. And it's a problem. It's a much smaller bourse, right? It's 700 companies versus 2,500 or something like that in Hong Kong. So, you know, I always find myself wondering, if you're investing in Southeast Asian companies and you're hoping to raise Southeast Asian capital, is it a problem for you as a VC investor that the stock exchange is not really firing on all cylinders here? Yeah.
I think I'm the only Singaporean on this panel, and you know, I'm based in Singapore. I shouldn't say this, but I don't think we have underwritten a single IPO on the SGX when we invested.
And why is that? Why is that?
It's a tough question to answer. I mean, okay, since starting investing 10 years ago, in the last 10 to last 5 years, a lot of the companies that we invested in were sub 20 million valuation when we went in.
Right.
And we underwrote a 10x return, which means that they should exit at 200 to 300 million, and we have materialized them.
Yeah.
That's how we got our DPI, that's how we made returns. And when you want to sell for 200-300 million, there's a lot of buyers out there. You don't need to go and jump through hoops to go for an IPO. So a lot of buyers will come in, especially if you're a regional company, and say, okay, I want a footprint in Southeast Asia.
Okay.
The Americans will come here and say, okay, I want this, and they will buy it.
Yeah.
So that's how we have made our strategy. So I had no need to go for a big IPO on the SGX. Now, if I think about some of the companies who might want to consider the SGX or local exchanges, you need to think about whether capital flows in or out, or capital flow stays here. One big reason why China, for example, could have a strong IPO market is because there's some levels of capital control. So after you finish buying all the land, where do you buy? You buy stocks.
Yeah.
In Singapore, I'm Singaporean. A lot of my personal wealth, if you will, is in the US.
All right.
Right. So I'm sure that happens for a lot of families and high net worth here. Your monies are not here. The money's not here. There's no liquidity. There's no liquidity. There's no reason to IPO on the SGX. So it's a structural problem. I'm not sure one that MAS can solve, but it's the nature of one of the things that we have to take as part of being an open economy where capital flows are very easy.
But Singapore has all these wealthy families, many of them from China, that are piling in to Singapore with their money. And that money seems to oddly sit in bank accounts, and often not necessarily in bank accounts in Singapore.
You have to ask EDV where the money goes.
You have all
I'm
these family offices, but they're not investing in the Singapore exchange and the companies that trade there.
I haven't seen a big movement in that direction.
Yeah. This is great. I think we're really getting into it now. So we've got mics, do we, here? And even if we don't, part of what these sessions are for people to really get involved, to ask questions, to make comments. And we've got a little time to stretch out and do that. So please, any of you, if you have perspectives or thoughts about this, stand up and tell us your name and who you're with.
I'm Jaya. I run a community of founders and investors in the startup space here in Southeast Asia. My question is around exits and the example you gave around entering at 20 and leaving at 200. I just want to quote Tinman Capital. Jeremy from Tinman talks a lot about this idea of capital efficient exits and how we should optimize towards that in SEA and just forget about unicorn hunting. So I just want you to dive a little deeper about what you think about the idea of these smaller exits in the low 9-figure or even high 8-figure range.
Sure.
Oh, great question.
Should I go or?
It's open to all,
Go
actually.
ahead,
Yeah.
who wants this?
Since I started.
Okay.
First, I think we have to have a good look at the structure of the Southeast Asian economy, right? The reality, like my colleague Ray has pointed out here, is that Indonesia, for example, being the largest economy, has a really low income per capita. What is it now, 4,000 per year? And
It's less.
right? Yeah. Some less, right? With 4,000 a year and growing at the scale of, I think it's 4% year on year, you can't have the same kind of growth as in China did in the last 2 decades, which is 12% year on year growth for 20, 25 years. So it's not the same level of, and I don't want to sound like a pessimist here, but it's not the same level of economic growth that can fuel that kind of large outcomes. So the outcomes here, we have to be realistic about what the outcomes look like. You will hit a ceiling. And if it hits a ceiling, and if you do your work and research on how big a potential natural ceiling can hit, then by nature, those companies shouldn't be raising 5 times each time $50 million rounds, because then you would be having artificially inflated pricing, which goes back to my point earlier on why I actually welcome the VC winter. Right? So if you have that sort of more realistic outlook on where companies can land, then you reverse engineer it and say, this is where I want to enter, what the price I want to enter it. Does that sort of answer your question?
Yeah, great.
And if I can
Go ahead, yeah.
And if I can add to that, right? I think you're absolutely right, because I think the title of this talk is the next billion-dollar opportunity. But as far as the financial investor is concerned, it's not about whether the valuation of the company, it's how many times you make your money on, right? So throughout the investment time when I was at SenseTime, I was the head of investment at SenseTime. And with my fund, what I did a lot is, you realize that the best return oftentimes is when a project that you actually incubate from the scratch. So you got in super early on, and then you can exit at not even billion, you can exit at 100 million, 200 million, but you still get 5, even 10x return. So take one example. mentioned about this neural computing company. So you can think of that as a reverse Neuralink. Instead of putting some computer chips in your brain, you use your neuron to actually compute. So that company has been in existence for 3-4 years. And so it started off with a research paper. So you can imagine when these guys are research scientists trying to raise money, the valuation round is very, very low, right? So what happened is that as long as you incubate these guys properly, now that they have a actual product, a hardware, the multiple increase of that valuation itself is pretty substantial. We are talking about something from less than 20 million to the next round now that we actually have a device, and now we're working with actually NTU and a lot of universities and robotic companies that easily just 10x. And this is not a company that would be $1 billion opportunity, or maybe eventually it will, let's hope. But even with the $1 billion, you're still looking at a very nice exit. And some of our investors does that.
Ray, Simon, do you want to weigh in on that? Any thoughts?
Yeah, I mean, it really depends on the fund's structure and what they're going after. If you're saying that you're like a $100 million, like a, I don't know, $10 million company, and you get taken out at 100 million, that's still a 10x return for a mid-market venture capital company. It's a great return. And it's really up to the GP to actually perform and construct that portfolio to make that naturalized and socialized return exceed above what the LP wants. So I think it's really dependent on what the GP and the fund is going after, I'd say.
Yeah, I think it's already, sorry, should I?
Yeah, go ahead.
Okay, it's already well covered. I'll just probably add a tangential point to this, right? First is that if we talk about AI and tech specifically, I think one thing that I kind of like when talking to AI startups here is that their valuation is still kind of making sense. That's one. The other one is talking about what matters is the return, right? And this is where I think it goes to the interesting point about the constraints that we have in Asia, in Southeast Asia, will drive innovation. In the sense that, what I mean by that is this. I attended iClear. iClear is a world-class AI conference, first time done in Singapore back in April. And quite a number of scientists, world-class academia on stage were lamenting, well, talking about two things, right? One is that Transformer just suck everything out. It sucks capital, it sucks GPU, it sucks everything out to the point that even when there are architectures that are potentially having a higher potential than the Transformer ceiling, it can't get enough capital, right? That's one. But some of the academia shared something that's very interesting as well, in the sense that they think that the answer to AGI, or superintelligence, as you'd like to call it, is probably not that. It's probably something else. And it has to be a lot more efficient, right? I kind of like, and that's where some of my optimism is coming from, that yes, academia, you might not be able to get 1,000 GPUs, but this will force you to innovate something else. And I've seen that, I think in Southeast Asia, that's quite a active research. So I like your point about connecting with universities here, etc.
Great. Nils, yeah.
Question for Esther. Big fan of SenseTime. So I want to ask, seeing that China seems to be so superior in computer vision and machine perception, but also have this incredibly strong supply chain and ability to build robots, if the world economy is still 70% physical labor and physical locations, what will it take for China to not win the AI race? Is China not ahead today?
Okay, so when you think about what constitutes AI, the supply chain of AI, we need 4 ingredients. You need data, which the world have equal access to. You need algorithm, and at the back of it is talent, in which China, I would think in this case, dominates. Because even half the AI scientists in the US, they are Chinese. So China dominates in that. The third one is hardware. This is where we have a little bit of an issue, as you guys know, because H20 is just recently resumed selling into China, but then the production line actually halted. So, but that also gave rise to some domestic chip companies. So it's opportunities due to lack of resources. So that one is missing. But the fourth thing that we did very, very well, I think Chinese did very well, is so-called the feedback loop. So the reinforcement loop, what do I mean by that? So when something doesn't do well, you test the market, how do you fine-tune the product? And that you witness firsthand. In China, there is a very large propensity to accept failure and fine-tune its product. And that is superior globally, even compared to US. The cost of failing in China is the most minimum amongst all big countries I've seen. So when you think about the AI race, quote unquote, it's not like there's winner here and there because there's so many little steps until you hit the prime goal. And I would assume for most people here, the prime goal is defined as super intelligence, let's say, right? So I think AI race in itself, China would have an advantage with that. But what is potentially can make China not doing so well? Tricky question, but I would say two things. Number one, it's the lack of the most updated hardware, okay? And this is actually important because we witness it firsthand. The Blackwell compute power is still, we're talking about 3-4 times more significant than the Ascent done by Huawei. So that potentially have a flywheel effect. And that is real. That impact is actually real. There are other ways to make it up, but that impact is real. The other thing is, I would have to say is probably due to regulation. So unlike the previous invention in history, whether the Bronze Age or the Internet Age or Industrial Revolution Age, AI is something that we create that beyond our control. We cannot control some aspects of AI. And that needs a lot of top-down government agreement on how to regulate that. So it's one aspect to say we need safe AI. But there's also another aspect on how you want this particular technology to be developed and to be deployed. And I think China probably, in certain aspects, has a slightly more restrictive approach. And that's why you see a lot of these Chinese companies, I think one of the panelists mentioned, great scientists that decided to start companies in Southeast Asia, or they in the US, or for that matter, in the Middle East. So I would think that would be the two issues that led to that.
But are you saying that second regulatory factor is an advantage for China or a disadvantage? Because to me it looks, I mean, I get the whole thing about safe AI and it's admirable that China is, on that, but it also has costs in terms of stifling innovation. And I just think, for example, remember when OpenAI first appeared? OpenAI, I mean, there were no restrictions on that in the United States, zero. And they just threw that thing out into the wild. They just made it available for everybody, and it blew up. It had 200 million people.
It is important because why do we think AI GC is so important to have a less restrictive regime is because the last ingredient of AI is the feedback loop. Right? Yeah. So if you cannot control the outcome, the feedback loop itself is halted as a result. Yeah. So that's why the technology don't have a free flow chart. Yeah. So that's why so many of the, if you look globally, a lot of these chatbots are actually made in China, but the company is incorporated outside of China because US or even Cayman or Canada, or even, for that matter, Turkey, has less restrictive rules than China because then that's how you can get a proper feedback loop.
I want to can we pass the mic back to Nils? Because I want to hear how Nils would answer his own question. Nils, tell us a little bit about yourself because you're very unique. Nils is from Sweden. He's now based in Hong Kong. He runs a company that helps robots navigate spaces without constant feedback and input from humans, but you're using Chinese robots. Tell us why you're in Hong Kong and what do you think about China's kind of capabilities?
So I think probably the end goal of AI is not super intelligence, but removing as much labor and suffering as possible from humanity. Like super intelligence is maybe how we get there, but probably the reason people will pay is because it removes some pain point from our life. Mm-hmm. And 70% of the world economy is still tied to physical labor and physical locations. So to me, the AI revolution hasn't truly begun until we start deploying the robots. And it's not lost on me that China is the only country that is shipping robots at scale. For those of you that don't know, when it comes to industrial robots, more than half of all industrial robots every year are sold to China. Mm-hmm. and more than half of all robots on the planet are already in China. So the gap is widening, and you notice that Mark Zuckerberg just poached a bunch of AI researchers from OpenAI. They were all Chinese, right? They were all Chinese. So I am curious to see how China does not win the AI race. I think the West has to catch up a lot when it comes to manufacturing and start building robots. A Western VC told me the other day that they've come to the conclusion that they can't source a single critical component of a robot in the United States. So my money is on China winning.
But robot is just the ultimate manifestation of one aspect of AI, right? It's one of the many aspects, is the edge device. But I mean, however, in AI, there are many, many aspects. So for instance, the whole AI stack is you have the data, you have the infrastructure, you have the LLM, and you have the application. Among application, you have the hardware and software. So robot is the last stack's hardware part. So I think it is the manifestation of it, but there are other things that AI could potentially do. I agree, by the way, that China is definitely winning the robot race. I don't know about the AI race, but China is definitely winning the robot race for sure. The feedback loop is super short in China. If you go to Huaqiangbei in Shenzhen, you get all the parts in 2 weeks and get it done, versus in US, it takes you two months, right? But there are other ways to manifestation of AI that is beyond the robotic form. So we give you one example. So for instance, Neuralink, right? Elon Musk just had this amazing demonstrations on how you can make a blind people see. Now, to be fair, they only test on one person. But eventually, you know, I do believe that AI plus bioengineering is one of the biggest aspects that we can improve human life. And that is not so much mechanism heavy, but that you need a lot of data, and that data needs to be translated into a device, and that device is not mechanically very difficult. But I do believe that within our lifetime, a lot of the blind people can potentially see. And also a lot of people that have especially neurodegenerative illness potentially can recover because of that. So that's another manifestation that does not take the robotic form. So there are other ways of winning, so to speak.
Yeah. So we had to let Nils go because Nil is actually displaying for us one of his robots on the main stage in just a few minutes later this afternoon. So that'll be fun to watch. Stay tuned for that. I've got a couple of thoughts, but any other questions from the floor here? Yes. Can we get a mic over here? Where's our floor mic? Oh, sorry, I didn't see you. We'll come back to you. And please tell us your name and who you're with.
Hi, I'm Raj Bharti, founder of Chronos X AI. We're a agentic data layer for regulated industries like healthcare and banking.
Huh.
Okay, so, you know, everybody wants a $1 billion exit, any founder, right? So,
right.
And investors would like a $1 billion exit as well. Still, US market is the goal, like the dream for any investor to have a great exit. And you mentioned that you have your liquidity in US. And you also mentioned that you know, U.S. market is something that to go for, right? So there's a common perception that investors in Southeast Asia are more conservative. U.S. investors taking bold bets, and many of the unicorns that have made into the stock market have gone through a network effect where they have been supported by investors who have taken bold bets all along, right? And the market is changing drastically. You see AI is taken in different forms. There are founders who are running with a very short team. How does your thesis adapting to these changes? If you want unicorns coming out of Southeast Asia, going into US market, has your thesis changed? Is still conservative, or how are you adapting to it?
You want to tackle that?
Yeah. I mean, the whole landscape is changing because in many ways, Southeast Asia and South Asia, the expectations are naturally just higher because you want better survivability and you want better profitability. So I see a lot of founders absorbing a lot of the learnings that, for example, private equity players do. So say you have an agentic healthcare startup and you've bootstrapped and you've gotten to a certain level, and now you're looking for funding or the next steps. I would advise trying to understand how you can employ private equity tactics, get some leverage, and actually acquire a competitor or a peer of your company to actually consolidate and increase your top line in that perspective. So when you think about a $1 billion company, it's not one company. I make this joke that, for example, like in the zero interest rate eras, only a company like Intercom could come out of that era because it's just one solution. When you think about a larger company setup, you want to think about how you want to conglomerize your company from being an agentic healthcare startup and an agentic XYZ. So the expectations have gone much more higher for investors, at least for my peers, when they look at companies and their extensibility. It's not about trying to understand which investor is more patient and how much more leeway they'll give you. It'll be more about proactive maneuvering to build your company into the next block, into the next evolution.
Great. We had a question back here. Yeah.
I had one related question. Sorry. I had one related question to his.
Let me come back to you. Okay. Can we do that? All right, let's do that. We've got just a few minutes, yeah.
Hi, I'm Rowan from Signal Consulting. I just wanted to pick up on the question of feedback loops. And, you know, I don't want to just say China's going to win, but China's going to win. And, you know, Neil's talked about robotics, but it seems like EVs and autonomous vehicles, China, you know, is just so far ahead of the rest of the world. In the future, it seems like deployment is going to mean victory, and China is going to be able to deploy so many more different use cases at such scale that it doesn't seem to me that it's even feasible for another country to think about winning. So how should people in Southeast Asia, or investors in Southeast Asia, equip themselves for a future where China inevitably wins?
Anybody thoughts on that?
Get an immigration corridor from China to Southeast Asia as quickly as possible. That is, again, nobody laughs, but it's a reality. That in many ways, if you think about AI in Southeast Asia, its success will rely on how many successful and brilliant Chinese scientists can come to the region and build a great business. In many ways, going back to the dominance of AI, China is already winning. When's the last time you heard of a meaningful open source LLM that's not Chinese, right? Even if you think about what Meta is doing, they're building a super army and they want to go closed source because they can't compete with open source. Llama 4 completely failed. So in many ways, I think you want to think about how that deployment reality is and how you want to think about open source solutions, because the political landscape that transfers into technology is already flipped. So thinking about diplomacy, working with different solution sets, especially from China, I think will define a lot of the success that Southeast Asia will have.
Huh, great. We've got a couple of minutes. Let's come back. Just stand up and tell us who you are and who you're with.
Hi, my name is DJ. I'm the founder of .Connect. It's a vertical AI company. My question was related to, so there are three things we discussed in this panel. So one, that the big opportunity lies in the application layer, right?
Right.
Second, building for the world. So building in Southeast Asia, right. Building for the world. Third, you also mentioned about like, you know, how there are a lot of family offices, but not invested or engaged enough, right? So what's missing? If we connect all these three dots, there's a lot of opportunity. We see very spotted, you know, the scale is not good enough. Very few, you know, examples where this has worked. Why is it not scaling, and what can be done to scale it?
Okay, who wants to tackle that? We got a minute and a half. It's a big question.
Capital restriction is what is not happening. Every single meaningful stock market in Asia was grown because money outflow was restricted by the government. So by being the perfect facilitator that Singapore is, it's been very hard for money to actually stay in the market where it needs seeding, where it needs terraforming. So in the most pragmatic sense, capital restriction is one of the most important parts of building different industries in country.
We only got a minute left, but you know, I think this season in my investing career is probably the hardest. And the reason for that is what was interesting last year is not interesting this year. And what's interesting now is not going to be interesting in 3 months' time. I'm sure all of us in this room has heard of the term, at least peripherally, prompt engineering, right? We've heard that term. The entire JDs about it, articles written about it, how there will be entire jobs created around it, companies creating. Today, barely anyone talks about prompt engineering. Why is that? Because anybody who is looking for a future-ready world, you have to, at some levels, utilize all sorts of AI yourself. So you have to be the one writing the prompts. So the way AI has accelerated and changed and is accelerating makes it difficult, a little bit difficult for me as an investor to predict in the next 7 years what's going to land, right? But that also that's the fun part, I think, of the job for investors and founders alike.
Wow. We have to leave it there. This has been an absolutely fascinating panel. Please join me in thanking our panels for really a lot of insight and great discussion. You guys are terrific.